we've already built up credibility because we've done this and we've done so many deals before. Before even, getting on the buy side, we did a lot of leases and sales as brokers. So we can go kind of like level set with these guys and like show them, hey.
Welcome everybody to another episode of the Big Picture Blueprint. Today we have a guest that's a friend of mine out here in San Diego, but before we get into it, how's it going, Mason?
Things are good. Busy. I feel like this guest was fun for us to interview, and me specifically, just because it seems like his route is almost a little bit of the inverse of mine. He kind of went the corporate route and on the broker side, and then kind of pivoted gears to start his own business. But he's very focused in the niche. And joining us today is Blake Rodgers, who's co-founder and principal at SteelPeak, a real estate investment firm focused on one of the most interesting niches in the market, industrial outdoor storage. Before co-founding SteelPeak, Blake was an industrial broker at JLL, where he was highly regarded as one of the most active IOS brokers in the San Diego market. He now brings that specialized expertise to his own firm, where he's responsible for shaping the investment strategy and leading the acquisition efforts to build a portfolio of these unique assets across the Western United States. So without further ado, let's bring Blake in.
Blake Rodgers, welcome to the show.
Thanks, guys. Appreciate you having me on.
Yeah, man, we're excited to talk to you today. Industrial outdoor storage is something I know so little about, yet at the same time, it's such a widely needed asset when I consider all the use cases. So I'm excited to kind of dig into this. But before we get too deep, can you give us just a backstory of how you even got into the space and where you started in real estate?
Yeah, sure. So I kind of fell into real estate. I got lucky. I started in 2015, so 10 years ago now, in brokerage. And one of my buddies was his dad was a commercial real estate broker, and his dad actually owned our fraternity house in college, which is funny enough. And the son was my big in the frat house. And he goes, "Hey, you're going to be in commercial real estate. I need you to join the real estate society program at our school." I went to San Diego State, Harvard of the West. And so I basically was forced into it. I was like, I wasn't going to say no to him. So I joined the program and I got on the board for the real estate society. And when I was on that board, I was in charge of internships. And the first internship that came in, I was like, I'm just going to take this myself. So it was an internship for commercial real estate brokerage. And I was young. I was still in college, a couple of years into college. And so I became a broker. And then I did about 8 or 9 years as a broker before jumping to start my own investment firm. And my last kind of 4 years as a broker, I specialized in industrial properties at JLL out of the San Diego market. And while I was a broker, I actually fell into this IOS space, which is what I do now, which is what we buy, industrial outdoor storage properties. So it's a niche subsector of kind of the greater industrial space. And at JLL, I also kind of fell into that. I got really lucky. iOS started heating up back in like 2020, 2021, where there was a lot of capital flooding into the space. And I happened to get to work with a couple tenants that I was representing that needed this type of space. And so I started tracking all of the properties in our local San Diego market before a lot of the buyers came into the space. And then right at that same time, I had just done a few leases. I knew all the properties. I started kind of seeing like, how these tenants needed the space and that there wasn't like very much supply at all. So it was really interesting at the time. And I was like, why is no one focusing on this? And out of nowhere, my team gets a call from a group that just raised $1 billion out of New York. And they're like, hey, we need someone to represent us in this market. We want to buy as much of this as we can. And I raised my hand. I was the only one that was doing these. And I was like, all right, let's go. So I was like, looks like I'm going to be specializing in iOS because no one else was doing it. So I took it on kind of full time and was like 90% of my brokerage business ended up doing these outdoor storage industrial yard type deals. So everyone else was doing like development, big box, Amazon, traditional, distribution buildings, what you think of just normal warehouse buildings. And I was running around to like junkyards trying to get these guys to sell yards. So it was pretty funny.
That's amazing. I remember sitting on a beach in Fort Lauderdale in 2022 reading an article called like, the $250 billion market that no one's talking about.
Yeah.
But Blake, I have to ask, what fraternity were you in?
SAE.
Okay.
Yeah.
Nice. I always expect to meet Sigma Chi's in business, but it just
my business partner is. And I met him at San Diego State. I rushed that frat. He was already in Sigma Chi at the time. So we knew each other through that. Both got into real estate, and then 10 years later, we started our company together. So it's pretty funny.
Hey, there we go. Should have had him on the show instead.
I know.
Something
he's gonna love hearing that too, by the way.
Perfect. Something we ask a lot of our guests, kind of being in this real estate and entrepreneurial world, I feel like there's this, fight between people that think the formal education of going to undergrad or grad school, versus just going on YouTube University or learning in the day-to-day thing. Everyone has their own opinions of which is better. How do you feel like your college experience and Greek life too impacted your ability to succeed in this space?
I actually think about this a lot right now because I have a younger brother who is kind of trying to figure out what college he wants to transfer to. And so I've been talking to him about it, and I've been thinking about it as well. I also kind of help people. I like mentor some younger guys too and help them get into commercial real estate. I'm always talking to young guys as well and gals. I think there's a huge benefit to going to a major university just for networking wise. Like my business partner is now someone that I met in school. I have so many connections in my local market through people that went to San Diego State, and we're part of like the alumni and all that. So we're like pretty involved still too, and it's kind of a smaller community. You get to know everyone. So that aspect of it, I'm like the social part of it, I'm fully bought in and sold on. Looking back, I'm like, that experience was great. And, you get to have fun and get it out of your system, meet a lot of people. And then now it's time to kind of build. And hopefully you're not still stuck, partying every weekend, living down, near the university too long, get out of that and kind of get into the game. But in terms of what you learn in school, I did not learn anything that I use today in school. I think, the writing skills, the general kind of finance knowledge, the social aspect of it that you learn, the communication skills and just getting along with people. I think that maybe had like being in Greek life, I think you're around a lot of social people. And so getting into sales, becoming a commercial real estate broker after college, I think that helped me a lot actually, because I was already super social through that. And so I wasn't afraid to go meet up with people or call people. And I think that kind of helped now looking back at it. But the actual real estate knowledge, it's really tough. Like I even have buddies that are getting their MSREs, so masters in real estate, and they're going to these really good programs. And I'll talk to them about stuff that we're doing at our company and just the investing side of the business. And, what is a return on cost? How are we solving to, get to a stabilized yield on cost in this year? How does that relate to where we exit on the property? What's the spread in between, like basics of kind of investing that I had to learn too, going from a broker to a principal. Most people don't even like learn the basics in school or how to raise capital or any of that stuff. So I think that eventually over time, it's probably going to get a little bit better, but right now, if you just go online and you find someone who's like a really good in the space, who's legitimate, who can be your mentor, and you even pay them to kind of work with them and consult with them. I would rather, like, I've done that too. I would rather go spend money, learn from you guys. Like if I was trying to get into land, I would hit you guys up and be like, hey, what does it take? Or can I help you find a deal? And in turn, learn what you guys are doing. I think that's a way better education than going to get your master's or something like that, honestly.
Yeah, I think that's a great answer because it's hard to be like, justify, I went to Baylor for undergrad and Trinity for grad school, so private school for 6 years, and be like, hey, it's worth paying that much money for the social experience. But my best friends and network and everything like that has come a lot from my fraternity and undergrad. And I think in hindsight, I went the healthcare route, so totally outside of the scope of real estate. But man, if I could do it all over, I'd study something useful like Spanish or another language, and then minor in business, because you're going to learn so much more on the job, but the connections you make and just the ability to think differently, I think can be really, really beneficial, because you can watch a YouTube video of how to create a pro forma for a real estate deal. You don't exactly 3 credit hours in a semester to do that, but I know Dan has his own thoughts and opinions on it, but he went to school in the middle of nowhere.
I'd be curious to hear. Yeah. What, because I'm curious, what was your background in like college and stuff, Dan? I forget.
Yeah, I got a business degree and I worked full time to pay for it. And I remember as I was graduating, I'm like, I learned so much from my job, managing people and being responsible for, margins on the work I sold and the guys I managed through the projects at the landscaping company. And I learned almost nothing useful at school. And because I was working full time, I wasn't getting that social benefit that you guys are talking about. And so I got done. I was so, and still am very jaded about college. If you're going to go to a nice college in a, somewhere like you guys are talking about, Baylor, San Diego State, and live there, I see the benefit from the social side. But man, the alleged education is pathetic. It's more just a working 4 years of networking and hedonism in my mind, which, as a 20-year-old, I was just angry that I had to work and couldn't have fun in college too. So that was part of it.
Yeah, I totally get it. I think if you're proactive while you're in college and you join, like I had an interest in real estate. I didn't really know I wanted to be in it, but I still joined and I still got involved with those guys. I got on the board. You have your internships because you have to have one when you're in the business program. So it forces you to kind of get into something at least. I thought that was good. So for the right person that's driven and wants to be social and just get through it, I think that's good. But I agree that you don't learn anything that you're going to use today.
No. But okay, so industrial outdoor storage. I want to put a box around that and define what it is. If you have a big storage yard and you have a barn or a big, industrial building, is it suddenly outside of the purview of what you do, or can you define it?
Yeah.
It's what all that encompasses.
So industrial outdoor storage, a very simple way to define it is by the coverage ratio, building to land coverage. So FAR, floor area ratio, or coverage is what a lot of people use. So when we're looking for a site, we basically say, hey, we buy industrial properties that have less than 25% coverage on them. So it could be zero. There could be no building at all. It could just be a yard, fenced, gravel, utilities, maybe a little office trailer. We don't actually buy those types of IOS. There's a lot of different types of IOS. We only buy stuff with buildings. But very generally speaking, it's an industrial property. They're typically smaller than your larger scale big box buildings. These are like, 3,000 square foot buildings to 50,000. And then they have a bunch of excess yard space. So your typical industrial building, let's just say on average is maybe 40-45% coverage. Older buildings had a lot more coverage, and it depends what market you're in. San Diego, there's a lot of buildings that have 35% coverage. So if we're buying less than 25% coverage, you automatically have at least 10% more, excess yard space on that property. A lot of the stuff we buy is like 5 to 10% coverage with the building. The rest of the site's pure yard. And that yard can either be paved, concrete, asphalt, gravel. There's different types of gravel even. But really simplistically, we're just buying high quality functional like industrial buildings that are used for service. So really like service facility focused. Think contractors or transportation related companies use these properties. And the value is in the land more so than what's in the box.
Okay, got it. And then, you kind of mentioned it, but who are the tenants and how does the structure of that work? Is it typically a single tenant that is going to, take an entire industrial outdoor storage facility, or is it a bunch of individual operator truck drivers that are leasing out individual space where it's more like kind of the boat and RV storage model?
Mm-hmm. So most of the space is single tenant, and the leases are the same as standard industrial leases. Most of them are triple net leases or industrial gross leases, but you can do single tenant or multi-tenant on these sites. Most of the stuff that has buildings are going to be single tenant sites. The sites that don't have buildings, that are more so just parking related uses for trucking, transportation, logistics companies, you can go multi-tenant on those sites, and you can either do spot by spot. So almost like an RV, if someone wanted to go park their RV, you can charge for that spot per month. So they'll have that pricing. It's like $300 per stall per month or whatever it is, depending on the market. And then, or you could do like, let's say we buy like a 20-acre site. I can split it into little 5-acre pieces and go lease those to different trucking companies. And they'll go use those sites for just trailer storage or parking or whatever it may be.
Interesting. Now, as we talk about this, I'm kind of surprised that there is such a substantial market of people who want to rent these. I would think a big logistics company or construction company would want to own it themselves. Is there a reason why they're okay leasing it, or how do these companies think about that, and why do they choose to lease?
A lot of companies own these. I would say 50% of our asset class, roughly. Don't quote me on that. I saw statistics somewhere recently that was like 40 or 50% of this stuff is owned by owner users. And so those are owner occupiers, trucking companies that want to just own their site. They used, SBA financing to buy it, probably very little money down. And so it makes sense for a lot of the local and regional groups to own their properties. And a lot of them do. But then there's another huge part of this business, which is the regional and national tenants that have, hundreds of locations across the US, for example, some of these really large companies. And those guys, let's take maybe like an equipment rental company, for example. They lease out construction equipment. And so those guys are already financing their equipment, and they've already got, the business that they need to operate, and they can make a lot more money on that business than by owning the real estate. So they're just not really in the business to own stuff. They'd rather lease properties. Some of those groups do own a big portion of their portfolio, but a lot of them, lease a lot of the properties. So there's a lot of bigger national groups like that just prefer to lease, and it's a very small portion of their like total cost. Like it's under 10% of their total cost. The real estate portion of it is actually not that much.
Okay. Yeah, that makes sense. It's analogous to a lot of retail stores, Walgreens, or a lot of restaurants do the same. Fast food restaurants do the same thing where they just rent. But okay, I want to get into how you structured SteelPeak, your company. But the last question I had, just big picture, is why do you think the space has remained so inefficient and underappreciated, so off the radar, when it is such a large space that so many huge companies need?
So the space has been around for a long time, and it's just been largely mom and pop owned for a long time because these properties are really small. So for these large institutional investors and private equity groups and big investment firms, buying these properties, especially when land values were a lot lower, like 5-10 years ago, the last 5 years in industrial real estate have been just crazy. During COVID, land values skyrocketed for industrial. So all of a sudden, these properties that, probably used to be very cheap back in the day, and just supply also is going down. Like these markets are getting built out. But it's really inefficient because it's these properties, like the average deal size is under $10 million. So you're buying a lot of small deals. So these institutional groups, it's too much work for them to put out that small of check sizes. They want to be putting in at least $10 million into a deal, a lot of them. And the bigger ones want to be putting in more than that, 25 million plus into deals. So they're focused on buying the bigger box or multi-tenant, shallow bay, business parks and stuff like that. So this space has just been more so private guys, owner occupiers, mom and pops. They had their equipment rental business, or they were a contractor and they bought the property 30 years ago. They operated their family business out of there. Maybe the son took over and, he wants to retire now. They're looking to sell the company and they want to dispose of the real estate, and it's not super sexy. They're not taking care of this thing. They haven't done any improvements in years. And so we come in and we buy a lot of properties from guys like that, families, private owners, smaller businesses. We go in, we buy them vacant a lot of the time, or we give them time to move out, do like a short-term lease with them. And then once they move out, we have our GC come in. We do a bunch of improvements to the exterior, to the site, the yard, make the security like solid, fencing, lighting, fix up the offices, and minimal kind of improvements, but still make it look good. And then we'll go lease it to like a regional or a national company that needs it, because there's very low supply of these sites that come on the market.
So I feel like that was kind of a good dive into the value add strategy, which is relatively asset class agnostic. Of, hey, you went in, you found a tired owner, and you went in and did all the stuff that they've deferred for potentially decades. But with the level of work that's required, it almost seems similar to taking, potentially a raw piece of dirt and going in and putting all these necessary improvements in. So is that a strategy that you're looking at too? Assuming, it's already zoned and entitled for the use of industrial outdoor storage?
If there weren't so many regulations, we would love to build some of this stuff, like the product that we know is in high demand. If we could just put up a small, metal shop building on a piece of industrial land that's zoned properly, and it didn't take forever, and it wasn't so expensive. It's just difficult to do. It's really tough. So most groups are buying existing assets in our space. It's just better to do it. You can buy it below replacement cost, and it's just such a headache to try to go get these approved. The cities don't really want these sites because they're bringing in truck traffic. They're heavier uses. They would rather see, some of these sites get upzoned to go multifamily. So a lot of like multifamily developers are buying up stuff. A lot of this is getting rezoned. So these companies are getting pushed out and they have nowhere to go, but they have to have these sites because they're critical for their business. It's like everything around you, like the chair you're sitting on, like the paint, everything around you comes from like groups like this that have to operate out of these types of sites. But they're getting like pushed out of these dense areas because either industrial developers are buying the sites, putting buildings on them, because you can make more money doing that, if you max out the coverage on the site. So a lot of the product has been going, to developers that way, or cities want cleaner uses instead of, well, maybe not cleaner, but they just don't like, if you're close to populations, they don't want truck traffic and all that stuff. So that's kind of why it's tough. It's tough to build. It's tough to develop these types of sites. And so there's not really too much new supply coming on the market.
Gotcha. Which to me screams that there's an opportunity out there for, people that know how to figure it out and potentially can find markets that, have that demand for that industrial outdoor product, but also, might have less regulations, which kind of brings me to next part of the conversation of you're doing deals in the West, which in general, I mean, the West is a lot, but if you're in the West Coast, California, Oregon, Washington, or some of the Mountain West, like Colorado, where I'm at, those regulations might be more complex. Can you explain a little bit why you operate on the western half of the United States and kind of what it is about those markets that's appealing for this particular asset class?
Yeah, it's more so kind of a home field advantage for us because both myself and my business partner were brokers and worked in SoCal. And then we have a lot of relationships in these markets that are close by. So that's one thing. And then a lot of our competitors and groups that are in our space that are buying these types of properties, a lot of them are based in the East Coast. So a little bit less competition out here. We know the market really well. So we kind of have some advantages there with relationships. And then we're chasing markets that just have solid fundamentals, populations, supply constrained markets. Think like markets that are surrounded by either mountains on one side, ocean, or like, a lake on one side, and they're constrained. And then you've got people that want to move there and a lot of business going on, a lot of construction. So that's kind of what we're looking at and why we're on the West Coast.
Yeah, that makes sense. And that barrier, provides an opportunity, like Mason said, for anyone who figures it out. So I get it. I get the appeal of people doing projects in San Diego. It's the same sort of thing. Okay, let's break down SteelPeak a bit from capital, team, market, and marketing methods. So let's just start with marketing. Where are you getting your lead flow in the first place?
Brokers are, mainly brokers. They're kind of the lifeblood of the business. I used to be a broker in this space for a while, and so I definitely know the value of what those guys bring. And that was my whole job before this, was sourcing off-market deals for investment groups like SteelPeak. So we're using the smartest guys that are in all these markets that focus on this type of property. And I'm working with them and showing them how I did it before and hopefully, building a good solid relationship with those guys, showing them how knowledgeable we are about the space, how active we've been in San Diego. And so we've been saying, hey, we want to go repeat this in your market. And we want to work with, the top handful of brokers in those markets that really know the iOS space. And so we're going out, flying out and meeting with those guys. And we're basically building up our pipeline a lot through brokers that are sourcing off market opportunities. That's kind of the main way.
Well, I would ask, because when you described who these sellers are, right? They're not institutions. They're not the same owners of, big industrial buildings. They sound like the same people that we buy land from a lot of times. And they do sound like they'd respond, some of them, to direct to seller marketing. Have you considered, in the spots or markets you really want to get deals, sending any direct mail or anything like that?
We haven't done that, but we are we're always talking to different groups and stuff, whether it be tenants or sellers, and finding deals that way as well. But I'd say a majority come from the brokers. When you own one of these sites, especially if you're like a private owner or a private family, you're not really doing the leasing or management on your own. You have a leasing company that's doing it. So you have a broker that you've been working with for the last 10 plus years. And especially over the last 5 years, now that this asset class has heated up a little bit, and brokers are kind of waking up to the opportunity a little bit more. They are calling on these owners constantly, so they already have very solid relationships. And when a lot of these owners, even though they're mom and pop, they're still pretty sophisticated. Like they own like a $5-10 million property, and so and they've ran a solid business out of there for a long time, likely, or they sold it and now they're leasing it to someone else. But they typically don't want to leave any money on the table, so they would rather bring in an advisor and someone they trust that they can use during the transaction to make sure that they're getting a good value for the deal. And so brokers kind of control a lot of the market. They really do. So that's why we use them as much as we can on both the sales side to find deals, and then we let those guys lease out the deals for us too that we buy.
Makes sense. And one more question on that, then. How are you initiating these conversations? I know commercial brokers can be very protective of their listings, where they have a group of clients that they trust to actually close. They share with those people their listings. And if you call them, you have to prove legitimacy really quickly or they're going to write you off. So how do you guys go about doing that? And especially, we can get into your team next, when oftentimes I believe it's your team calling these people, not you.
So the first call has been myself and my business partner, because we have been bootstrapping this over the past 18 months. So we launched in January of 24. So I was originally making all those calls to brokers and making those introductions and kind of utilizing my connections through my firm that I worked at, because we have an office in every major city. So I know a lot of those guys already, and I can go in and, talk to the JLL guys in those markets, and it's been super helpful. But yeah, you're right. We have an acquisition guy that kind of leads our efforts right now, and he's definitely making most of those calls. And the way that he's getting in with these brokers now is through the credibility that we've already built up. So we've already bought 7 sites. We're buying 8, 9, and 10 right now in the last 18 months. So we're very active in these markets that we're looking in, comparative to a lot of other groups too, who have kind of slowed down recently just due to interest rates and kind of macro economy. So they see that we're active, and then they see that we are aggressive and kind of younger guys that want to do deals. And so it's a little bit easier for us to get in with them. And then when I'm calling them too, it's like, well, our acquisition guy too was a broker previously. Every one of us was a broker previously. So we know how to speak their language, and we've already built up credibility because we've done this, and we've done so many deals before. Before even, getting on the buy side, we did a lot of leases and sales as brokers. So we can go kind of like level set with these guys and like show them, hey, we're credible. We have the same knowledge as you. We were in your position. We know what motivates them. So like, let's go make a bunch of money together and have fun doing it.
Awesome. So Blake, I've kind of had a little bit of the reverse journey of having been, business owner for 4 years now, buying all the deals myself, and just got licensed as a broker here in Colorado recently. And it's tricky always being new at something. It's like, doesn't matter if I've done 100+ deals this way, doing it from this capacity of like, just like filling out all the contracts as a broker and everything is a little bit challenging and surprising because I've always thought realtors are so dumb. I still kind of think that too. But what are some surprising things as you've made that transition kind of in the opposite way of going from the broker to the principal that you might not have expected or potentially even been humbled by?
Yeah, there's so much that you don't know if you're not focusing on the whole picture. So as a broker, you're only seeing one side of the business, right? And you're kind of siloed into that side of it. So you're not getting into the weeds on underwriting as much. You're not thinking about risk the same way that someone who has to buy it and take that risk themselves. Because as a broker, you don't really have any risk, right? Your risk is just your reputation, and then you're risking, not having any income because you're making all commission, right? So you're taking like an income risk and maybe a reputational risk if you do something wrong in our industry that can hit your future income, but you're not losing money on deals. Like there's no potential to lose money or to have to like spend money. There's no cost, right? The cost is your time. So that was one thing that I had to really shift my mindset is, oh, wow, okay, I can't just go tie up every deal on the planet because the second that you do, as you guys know, you're going to incur costs. Attorneys are expensive. Vendors are expensive, third-party reports, everything. So if the deal doesn't work and you don't do the proper due diligence up front and you're not actually like taking your time to buy quality sites, you can, if you drop something after you've already spent a bunch of money, like you're going to be out that money. So that's the biggest thing. And then understanding risk is huge. Understanding how to look at these properties in terms of risk is huge, and what investors want. We do everything from syndicate. We've syndicated a couple deals, so we have a lot of private friends and family in deals, and then we've done family office deals. We've done private equity, institutional equity. So we have a handful of different investors that we've partnered with on these deals because we've done kind of one-off projects up to this point. And so you learn how they look at deals, and they're a lot smarter than us. Like they've been doing this for a long time. And so these groups, like we're like no ego. We're like all the questions that they ask us, we're like, that was an awesome question. Wow. Why didn't I think about that? So that's kind of like having that open mind and then being able to see it from the investor standpoint as well, whereas I was kind of stuck in this broker perspective where it was more so kind of like focused on the actual property features as well as maybe the tenant features, less so about the risk and the economics. So learning all that has been great.
Yeah. I mean, that was a really fantastic answer and totally understand it. And that's part of the reason I became a broker is like being able to have that upside without spending a tremendous amount of capital to add to the traditional.
It's an amazing business. Like commercial real estate brokerage might be one of the best businesses you could ever start in because there's just no cap on what you can make. And then you do learn so much on that side of the business. And then you can kind of create your own flexible lifestyle. Like once you get your business going, these guys are making really good income and they get to take as much time off as they want, as long as they're still servicing their clients. But like I loved being a broker, and looking back, I'm glad that, that was my background versus kind of climbing the ladder with maybe an investor or working for someone on the investment side. I think having both sides of it now is really beneficial. So it'll be good that you kind of learn the brokerage thing too as you go.
Yeah, no, I absolutely agree. And that was a lot of the logic behind it too. But on the investor side of things, having done deals, it sounds like with kind of, the whole gambit of different types of investors, and I imagine potentially bank financing as well. Who are your favorite types of investors to work with, and who are the worst types of investors to work with?
I love all our investors.
Yeah, me too.
Yeah. But I think that just the way that we're trying to build our business, which takes skill, and we want to build a big company, we're looking at it more so as building like a significant, meaningful, like operating business versus just being real estate deal guys. And so in order to scale the way that we want to and to buy as many of these small deals as we actually need to in order to achieve that scale, because we're buying a bunch of $5 to $10 million deals. So you got to buy a lot of them to put out enough capital to where it makes sense to be able to scale and hire people. We've found that having one source of equity on that deal is a lot more effective than doing syndication or raising it from multiple groups. So we're going that route, and that's what most groups do in our space too. So we're going more of the institutional route.
So that all makes sense. It's much easier if you just have one source of capital. I imagine that simplifies things and work on your end. Now, what about the team? What does your team look like? Where do you hire these people, and how are they compensated?
Yeah, so our team is now 4 of us. Hopefully soon we're going to be hiring another guy to join our acquisition team. And so it's myself and my business partner, and then we have 2 other guys plus an intern right now. And the existing 2 guys that we have, one of them is more focused on acquisitions, and the other is more focused on kind of closings, finance, operational stuff, asset management. So we found these have all been kind of organic relationships where we already knew these guys. So we never really put out an ad or anything. It's just kind of through our network, which has been good. And the first guy we hired was already a broker that we were actually working with, and he was bringing us deals, and he moved to the San Diego market. So we were like, maybe there's an opportunity for us to work more closely together and bring him on. And then the other guy was also, I had known him from he grew up in the same area, has a really strong background with an institutional developer, like a big national developer. And so he's kind of beefing up our back office and helping us with a lot of that stuff to kind of, make our processes and our systems more so like the big guys, and so that we can kind of scale from there. So that's what we've done so far. I think we're going to continue kind of just hiring through our network, really. And we're involved in San Diego State, USD, all these schools locally too. And so getting good interns from those schools, like we have an awesome intern right now, and hopefully we can bring him on one day as well, full time. So but we're staying very lean. We do third party property management. Our marketing is third party, CPA, attorneys, accountants. All of everything else is third party. So we're really lean right now, but we're gonna grow really quickly is our goal.
Nice. Yeah, that's exciting. I know you've gone full cycle on a few deals. So I want to talk specifics as we can get on one of these deals you finished, as far as, okay, how you found it, what you saw that made it worth pursuing, what was the upside, how you executed it, as much as you can share. Is there one in particular we can kind of talk?
Yeah. Well, we've only sold 1 deal so far. Okay. So we'll hopefully own 10 here by the time this airs. I'm hoping. So we've sold 1 out of 10. We have a couple others that we're looking at potentially selling. But our goal is to aggregate a portfolio, and ideally not have to sell too much of these. We can sell these at better pricing as a portfolio. So that's what we're trying to do, but it does make sense to sell some of these one-off if we get a good offer. This first one that we sold was actually a really quick turnaround that we didn't expect. And we got one of those good offers that any real estate guy would have taken. You'd be, stupid to pass up something like this. So we ended up moving forward on the deal, and it was an awesome one. It was a very small deal. It was actually our smallest one that we bought. So we bought it for $2.6 million. And this was a deal in San Diego. So we already knew the market really well. It was brought to us off market by a broker who I was already buddies with through my previous career as a broker. And so we looked at the deal. The owner wanted a 1031 exchange, found a property that was that was a better fit for them, less management intensive. The tenant that was leasing the property from the owner actually went dark, and they left. They no longer needed that site. Their lease was expiring, but they were still paying rent. So they were already out of there. So we knew that we were going to get it, and it was going to be vacant within like a couple months. So basically very similar to what we buy, small industrial building, excess yard, smaller deal, single tenant, vacant when we got it. So we got our GC in there, did, minimal improvements, but made it look good. And it's functional site. Everything was solid. And as soon as I think before we even completed construction, we put it on the market for lease as soon as possible so that we can start getting inquiries from groups that are looking in the market. And so the broker that brought us the deal was their team was marketing it for us for lease. And this actually happens a lot in our space, where a lot of the tenants do want to own, like you were talking about earlier, Dan. And so one of the tenants that reached out to us was like, hey, would you guys sell this? And we weren't looking to sell it. We would have rather just ran our business plan, lease it, and then hold it until we either wrap it in a portfolio or maybe sell it later on once it's already stabilized. Excuse me. But for this one, the tenant was like willing to, they've been looking for a space for a long time. They couldn't find anything like this property. They were like, how did you guys get this thing? And so we kind of got lucky, and they made us an offer that we couldn't turn down. So we sold that. We bought it for 2.6 and we sold it just under 4 in like 6 months.
Nice.
Mm-hmm.
That's excellent. Yeah. And it's interesting how normal people think about buying in bulk, you get a discount, right? You go to Costco, you buy in bulk, you pay less per unit. Whereas in the investment world, if you aggregate cash flowing real estate or businesses, you usually get a higher multiple and the buyers pay a premium because those huge hedge funds and the Warren Buffetts of the world, it's so hard to deploy huge sums of money. There's so few assets available that they'll actually pay a premium, which is just interesting because it's counterintuitive to what we see in our day-to-day lives often.
Yeah, there's so much value and sweat equity that goes into aggregating these smaller deals at scale in all these different markets. So like that's where a lot of the value comes from. And if you can come in and just buy a big portfolio of this stuff, it makes your life a lot easier, especially since there's the fundamentals in our space are so good that long-term, rent growth and value looks really good.
So walk us through kind of what the 10-year plan is with your company. Is it to aggregate as many performing assets as you can, roll it up, sell it to private equity or some huge institutional buyer, and buy yourself an island that we all get to go hang out at? And
I wish any dollar I make, I'm going to reinvest, and we're going to keep building the monster. But that's exactly the game plan if we can do it. And we definitely have some great momentum, and we're working with some great investors. We've bought some really good deals, and so that's exactly what we're going to do. We're targeting Western U.S. markets, so Denver west up to Seattle and down to San Diego. So we're looking in California. I'll just say our target markets are it's the bigger markets along the Western U.S. So bigger industrial markets. So like Phoenix, Denver, Vegas, SoCal, Seattle, Salt Lake, markets like those is where we're playing in, and we're looking to buy a few deals a year in each of those markets would be our target. So we're definitely open to opportunities.
Get a little more specific if you can. We've got a good amount of brokers and people in the business that listen to this show. So if they can, bring you a deal, what's the size of the property, kind of purchase price, indicators that you see that you're like, this is a good deal for your team?
Yeah. So we're generally anything up to 10 acres with less than 25% coverage is kind of a good strike zone for us. And we focus on iOS properties that have buildings on them. And we are less focused on kind of trucking, trailer parking type sites. We don't really buy just pure yard deals. And we're looking for stuff that are existing. They already have, zoning that allows for outdoor storage uses by right. And so, yeah, it's like our bread and butter. We just bought a site that has like a 30,000 foot building on 5 acres. That smaller site that I talked about I think that building was like 7,000 feet on a couple acres, kind of in that range. So if there's anything like that fits, and we're value add guys. So we're looking for deals that have less than 3 years of remaining lease term so that we can go in and run our business plan, add value, do improvements, and then go lease it up at market.
Awesome. And are there particular areas beyond, like the zoning and regulations allowing for these particular sites is it better to be closer to a highway? Does that matter as much? How far on the outskirts of these markets would you consider?
So that's a great question. We don't really go to like secondary or tertiary markets or even sub-markets.
Great. Yeah, we'll wrap it up here. We're going to have you back in the future for a round 2 to talk through more of these projects. And as you get bigger and eventually sell to private equity, I'd love to, see how this plays out, because it's a really interesting niche you're in. And I think there's a lot of upside, and it shares a lot of the inefficiencies that land has and appeal. Until next time, this is Dan Haberkos, Mason McDonald with Blake Rodgers for the Big Picture Blueprint, signing off.